As we just saw, the Naira pretty much stable. Give us an indication of the overall fixed income market. We know that it has perhaps not reacted very much to the fact that the central bank kept the MPR at around 12%.
Yes, in the fixed income market, we've seen a bullish run on the market. We've seen FDIs come in with a lot of dollars, and then this has helped to maintain or stabilize the exchange rate of the Naira to the dollar itself. But in the fixed income market, apart from the T-bills auction, the primary, over 250 billion of OMO T-bills have also been sold. But these maturities are closer to the 1-year tenures. Basically, the retention of MPR at 12% has just given investors confidence to buy more, really. If it had gone up a little bit, it would have been the first time MPR would have been increased this year, and then it would have been an indication of what could happen. And then people will be very careful and then be more averse to taking positions. But what we're seeing is that apart from FDIs coming in and investors, even individual investors coming in to take positions, we see even banks and other non-financial institutions taking positions on treasury bills. Because it looks like on the short run, what we'll see is that yields on T-bills that 15.2% levels would drop below 14. Last primary for 91 days treasury bill in Nigeria stopped at 14.8, and then on Wednesday it stopped at 14.3. There's another, there will be another primary T-bills issuance on Wednesday. We expect that yields would continue to drop, basically, even though on treasury bills, the 1-year maturities, we've seen a rise in yields, basically because the central bank has come to mop up excess liquidity at that end of the market, 1-year treasury bills, really. So basically, you see people selling in the secondary market to go cover at the auctions, just to take some arbitrage spread, basically.
Let's also just touch on the bond auction next week, Bankole. We know that the bond auction had been or has been delayed until the 28th of March. So next week being a very important week, how has this decision now affected the possible demand-supply scenario into the auction next week?
Okay, bond auction was postponed because of illiquidity in the system, but federal allocations have come in. And then the system figure closed at over 300 billion, but today we don't have the figures yet. But really, the reason or the essence of postponing the bond auction until after federal allocations come in is because it will help those who are going to be willing to buy, really. So it makes it cheaper for the government to borrow on the long end of the fixed income market, basically. We expect a bullish run on this market. From what we gather, there will be issuance of 10-year bond maturity of 2019 and 2022. The last time these bonds were issued last month, on the 29th of last month, we saw the stop rates at 16.16 and 15.893 levels. We expect rates to stop below 15.5 because the secondary market have got to that level already. We have 15 bonds of medium-term maturity around 10 years, all ranging from between 15.4 to 15.55. So basically, that will dictate where, it just shows the appetite level and where investors would like to bid for these 10-year maturities, really. Yeah. We've seen a lot of activity on the short end of the bond market also, because usually when bonds of 3 years maturities reduce in tenure, it gets very close in status to treasury bills, and you have the 2 years to maturity bonds. It's Series 1 at 15.2% levels, very close to treasury bills rates currently.
Bankole, let's also just touch on the FX market, because the Naira has been relatively stable. We've actually seen oil companies continue to sell. The Central Bank of Nigeria increase in supply twice a week from $150 million to around $200 million. And we know that the Central Bank, every time they come out into the market, they announce a specific number and then they always go below it. Is this one of the reasons that we've actually seen quite a bit of stability within the currency?
Yes, basically we have seen a lot of savings from the government. Of course, crude oil prices have gone up. We've seen government share excess crude fund of over $104 million in the last 2 weeks. So basically they've increased the amount to be sold at the WDAS auctions to stabilize the naira. At the MPC decision, the central bank governor also reiterated that they will continue to defend the naira, whilst they also keep an eye on the reserve. They may not try to grow the reserve aggressively, but there's a modest approach to ensuring that the reserve initially is stable and then gradually it climbs up. What we've seen is that oil companies also are not retaining their dollar funds. On a weekly basis, they sell dollars in order to generate naira. Right now, naira is the king. Naira cash is the king. So basically, we have weekly sales. This week, since last Friday, we've had a sale of over $90 million, plus what the central bank sold in the WDAS auction, giving us a total of about $500 million. The market demand is fine, quite higher than that, but basically pressure has been reduced on the naira, as naira closed at 157.60 to the dollar, which is not far from the closing rate on last Friday, basically.
With regards to the equity markets, a big focus that has come through on the earnings that have filtered through. Quite a bit of digestion has been occurring as well. Are investors starting to create more of a positive outlook when it comes to the NSE?
Yes, the outlook is more positive. I would not say it's not the most significant positive outlook yet. Market stopped at 21,400 at the index level. We've seen it go up, inch up, marginally though, but we expect this to continue as more companies continue to show their financial year-end results. I know that Lafarge came in this today during the trading period, basically, and some other companies closing positive, doing more than 60% of what they did last year. That's Lafarge Wapco. It just shows that the more these companies do well individually, the more it affects investors' confidence, really. And then looking at what is happening at the parliamentary level, where all sorts of investigations are being carried out to tidy up what's happening at the secondary markets. Really, all this just comes together to push the market up, basically.
Fantastic, Bankole.
Even though cautiously, marginally.
Thank you, sir. Thank you. I appreciate your time, and of course a great weekend to you. Bankole Odusanya, fixed income expert at UBA.